Welcome to another edition of the Effective Living series, which is coming to you on Citi FM and Citi TV. The series are aimed at equipping you for your 2023 starter pack. Today, we're focused on insurance as the fundamentals under the financial focus subtopic. Week 4 has been on financial foundations for 2023. And today, I'll be talking to a man who's been in insurance for close to 20 years on what I call the fundamentals of insurance. He is the senior manager for broker-led corporate distribution in Ghana's oldest insurance company, who also happen to be sponsors for the series, Enterprise Insurance. Michael Otu Larbi is my guest. Good morning.
Good morning.
How are you doing?
I'm well, and you?
I'm fine. I like your top.
Thank you.
Was it designed just for Enterprise? It's really, really nice. Maybe I'll take it when we finish.
I hear you.
It's really nice indeed. Enterprise is your advantage.
Yes.
Fantastic. So you are the senior manager for broker-led corporate distribution. What does that mean?
Okay, so for insurance businesses, we have channels through which insurance is sold. And one of the key channels is the broker channel, where we have intermediaries called brokers. These are companies which are duly licensed by the regulator and National Insurance Commission to sell insurance in partnership with insurance companies. So they sell the products of the various insurance companies.
So some insurance sales come from brokers?
Yes.
As against what?
Agents and then direct.
All right.
Yes.
All right. So a broker can then match supply to demand. Brilliant. So let's talk about insurance and financial protection. I mean, what does that mean?
Okay, so financial protection means having some financial arrangements in place which is able to cushion you or to help you should the unfortunate event happen. Okay. So you may have a house, the house can be caught up in fire, or there can be a flood which can destroy the house. If you have some financial arrangement in place in terms of insurance, it can give you protection against the loss you suffer because of a certain unfortunate event. It could be loss of job, it could be critical illness, it could be death, it could be injury, it could be anything unforeseen that can really hit you so bad that you may not be able to survive without having in place those financial arrangements. So apart from insurance, you can also have some investments and then some savings. But particularly key for financial protection is insurance. Yes.
So it looks like insurance is the one that guarantees some protection when unexpected things happen.
Yes, because even if you have investment, you may never know the extent to which the financial implication could be, and your investment may not be able to sort you out.
I see. Later on, we'll talk about the various things that are insurable.
Right.
What you can insure against and what you can't insure against. But what is the starting point in attaining financial security? Okay,
so before I go to that, let me also say something a little about insurance and what insurance means generally. It is an agreement, in which one party, in exchange for a fee, agrees to reimburse the other party. So the party that agrees to reimburse is the insurance company. The one who is being reimbursed is the client or the insured. The fee is the premium, all right? And generally, there are two main types of insurances. You have life insurance, which is more of long-term in nature, and then you have non-life, which is generally referred to as general business. These are short-term also in nature. Those two main aspects of insurance.
So under general, you have things like
motor insurance, marine insurance.
Marine.
Yes.
So in Ghana, which is the commonest type of insurance in Ghana?
These days, the most common is a motor insurance because by law you are required to insure your vehicle.
So you can't use one. Yes. After that, you have what?
There are several of them.
Just from the top of your head, which are the common top 5 areas of insurance apart from life? I'm talking non-life now.
So 5 fire insurance.
Fire is also
apart from motor, fire insurance, marine insurance.
What's marine insurance?
Marine insurance is goods that are transported by sea or even by air.
That's why they talk of CIF. Yes. Cost, insurance, and freight. So when you put your car on the ship from Canada or wherever, you must insure it.
Yes, you must insure it.
Because if it hits a tornado or something.
Yes. So for both the goods and then the vessels themselves. So the aircrafts and then the ships that we see around are all insured.
So there's motor, there's marine.
There's
when you say fire
insurance for buildings, for warehouses. It could be a warehouse, it could be an office, it could be a home, it could be a shop. Both the building, that's the structure itself, and then the contents. So if it's an office, your office contents, your furniture, your equipment. If it's a school, hospital, the same thing. If it's a warehouse, the stock, whether it's bags of rice or sacks of flour, what have you. All those can be insured under fire insurance.
So that's fine. And what else? What other areas of insurance do we have?
We have personal insurance.
Personal?
Yes, personal accident insurance. So taking insurance for your person.
For yourself.
So that in case you get injured or you die, or, God forbid, you have insurance coming in to pay some compensation, a benefit to you.
So
travel insurance is also common.
So accident one is like, so assuming you're a worker and you have accident insurance, it means that is the insurance to cover your medical treatment or is to help you whilst you are not working to get some
so
money?
there are aspects of it. If you go into the details, there's the medical benefit, there's a temporal benefit for temporal when you don't have opportunity to work, so you stay in the hospital
temporal
for a while.
indisposition.
Yes, or where there's permanent disability or death. So medical, temporal,
all those ones are in
permanent, death, all of that come into the personal accident cover.
And then you say there's also, you mentioned the fourth.
Travel insurance.
Travel insurance
is also common. These days it's a requirement. A lot of the embassies will require that you have some insurance.
Travel insurance means what?
Whilst you travel abroad.
So what are you insuring in particular?
You insure against anything happening to you whilst you travel. Yes, so it could be anything. Injury, death, loss of luggage, hospitalization.
So there are aspects of travel insurance you can.
Yes.
So you can insure your bags.
Yes, your luggage, all of that is a component. So you will choose whichever you want. Some packages come with standard amounts or compensation levels.
Can you insure yourself against being sacked from work?
Yes, so you can insure yourself. That's a loss of job. So for life insurance, you have something like family income protection plan, which can take care of unemployment in case you suffer. Even apart from loss of job, if you suffer some critical illness and as a result you're unable to work and all of that, the bills you have to pay because of all those things come into play.
Can you insure your machines? So let's assume we are Citi FM, Citi TV, cameras, studio equipment.
Your equipment.
Can
so
you
like
them?
I mentioned, yes. You can insure all those equipment. Drones, if you use drones, you can insure all of those things. Yes.
Wow. That's so it's a vast area.
Very, very vast, Bernard.
And I can imagine that there are newer products coming as human interaction become more complicated.
Yes, so even for us at Enterprise Insurance, the third party, the motor third party cover, standard cover, provides compensation for the other person. That's you run into a pedestrian, you knock him down, he may be injured or could even die. You can run into another person's vehicle, another person's property, caused by the roadside or whatever. Those are compensated for under the standard motor third party.
Wow.
We have gone ahead to come up with what we call the third party amplified, where we say that for damage to your vehicle, we will provide compensation in terms of some minor damages into your windscreen, your side mirrors, and then some minor scratches to the vehicle. These are not covered under the standard motor third party
we'll
policy.
Come back to that. So let's talk about the starting point.
Right.
Because don't forget, this week our focus is on laying the right financial foundation. A couple of days ago, we had a guest who was talking about how to get out of debt. We've been talking about investment fundamentals, and today we want to see the role insurance plays in the financial equation. But before we come to the question, don't forget this is the Effective Living series. This is actually day 3 of week 4. And my guest is Michael Larbi, who's from Enterprise Insurance. And we're trying to understand the basics of insurance. So let's talk about the starting point in attaining financial security.
Yes, so the starting point would be to do a self-assessment. We go to school and learn all those things, but we don't apply it at the self level. We do it in the organization. But you need to analyze your risk yourself. So you tell yourself, okay, I'm a young man or a young lady. I have a car. I've started working. I have a car. Have I insured it? If that car should be damaged, what happens? Or I'm a young man who has hustled combine some few CDs to be able to get a small car to do Uber, and that's what I live on. If something should happen to that car, what happens? So you do your assessment. Oh, I have children. If I'm not around tomorrow to pay their fees, what happens? There's an insurance policy you can take for all those things. So you look at yourself, your parents, your dependents, yourself, loss of job, everything, all the assets that you have. Name them: houses, cars, some valuables. Even if you don't own a house, you are renting, the content is yours. You've worked so hard to buy some furniture, some deep freezer, some fridge. You should be able to look at all those things and ask yourself a question. What if you come back from work one day and the freezer is spoiled or is burnt? I mean, what happens? You have to save again, or that house that you've managed to put up yourself, it took you 10 years. All your savings, your lifetime investment has gone into the building. What happens if you come back, you wake up one day and the house is no more because of a fire incident? I mean, that can hit you so hard. So you analyze, you look at yourself, the various exposures you have, anything that can happen to you, and its financial implication for even your dependents or your beneficiaries.
Is this something I can do on my own, or I need an expert? Because if I want to do a self-assessment, are there people who can say, Bernard, sit down, here's your income, here's your this, when I draw your equation, this is your risk profile? Or this is something common sense can do?
Asking, all of us are not at the same level, so level of knowledge. So you may not, it's not everybody who can do it perfectly. So you need to talk to an insurance company and tell them, okay, these are the things I have in my home. Okay, I have this car, I have this equipment in the house, blah, blah, blah. Or I have a small business, we are into this. How can I take care of these things so that if there's an unfortunate event, I don't suffer? So you explain your situation to the insurance company, and then based on that, they would advise you on the necessary insurances you can put in place to protect yourself.
So the starting point is self-assessment.
Yes.
But what lifestyle changes does a person need to embark on in this journey to financial security?
We need to change the mindset, the mentality of spending on unnecessary things. You know, we can make room. It will surprise you how much it will cost you to do insurance for your home, for the building, for example. And you might be surprised that you may be throwing that money away in other things that are not necessary. So look at yourself. Somebody may be doing it, but for all you know, they have the buffer and the insurances in place already. Look at your life and tell yourself that, what do I do, all right?
Interesting. Now, so let's come to the types of insurance coverage available. I have already broached that, but just for the clarity of purposes, there's life and non-life. And the non-life, but just in Ghana, which is bigger, life or non-life?
Currently, non-life is bigger. Yes.
Probably has an older history in Ghana as well. And you've said motor is the number one. Yeah. Then there's also marine. Then is health insurance a different kind of insurance?
It's also part of the whole insurance arrangement. So there's health insurance, even in some jurisdictions, when it comes to even pensions, it's a form of insurance against your future. Okay. So it's also considered as part of the whole.
But I'm asking about health insurance in the sense that is health. You know, we have national health insurance, which is national. Yeah. But do your companies do private health insurance? Yes. Or there are different companies that do those things? So for Enterprise Group, we have a subsidiary that is into health insurance. Okay. So organizations come up to see them to buy the product for their employees, so that when you are not well, you go to the hospital, you present the card, and then you are taken care of. I mean, there are different types of packages. So depending on the package you choose, it gives you a certain level of benefit. Yeah, but as a general principle, I know, as you said, life is more long-term than non-life. But what is peculiar about health insurance? Is there something you need to know before you start? Because I'm asking this because a lot of people feel because there's national health insurance, they don't even need to do health insurance. But I also notice that a lot of older folk have a lot of health expenses. And many times they are not able to foot them. So, and I don't know how well developed the market is in Ghana. So any quick ideas about what to think about when you want to consider health insurance especially?
Right, so for private health insurance, they provide a bigger scope in terms of the benefits you can get in taking care of yourself at the hospital. So normally it is a bit more expensive. The national health is national, it's government, so it's heavily subsidized. I mean, you pay next to nothing, something small, and then off you go. But for private health, I mean, it comes with a bigger scope in terms of what is covered, and then it's a bit expensive. It's a bit relative to the national health, because of course that it comes with more benefits. So definitely,
and I guess the later you start, the higher your premium. So is it a general principle in insurance that the earlier you start, the cheaper it is? And if you wait too long, your premium is higher because your risk profile gets higher. Is that the way?
Yes. So even for, let's say, for life insurance, beyond a certain age, you may not get cover. Beyond a certain age, sometimes it's 80, depending on the insurance company. Some is 75, some is 85, and so on. Yes, but the older you are, the higher your premium will be, because you are more prone to certain diseases because of your age. Generally.
But this is true for life and then for health.
Yes.
But not necessarily true for, because if a 70-year-old man buys a Jaguar fresh from yard, he's calculating his risk is different.
Yes.
In fact, his risk will probably be lower than a young man who drives recklessly.
Yes. Currently under the motor tariff, I mean, age is not really a factor.
A factor.
Yes. Unless the insurance company itself wants to consider that. But per the tariff that is given to us by the regulator, the National Insurance Commission, age really is not a factor. Company by company may want to consider that, but they have the right to do so. But because the tariff is the minimum we are supposed to charge, so we can do any additions here and there where we realize that a certain risk is more likely to occur. So we may tweak the premium
the
a
word
bit.
that you keep using inadvertently is risk.
Yes.
So you can't do insurance without risk.
Yes.
Right. Now, so the question is, as a customer or as a person who is to be insured, my objective is to reduce my risk profile.
Yes.
To make myself more attractive to you. So what are some of your general thoughts around risk and how individuals and companies can reduce their risk to make everybody happier?
All right, so for risk, insurance is a risk transfer mechanism where you have a certain risk, you say you can't handle, so you give it to the insurance company and they charge you something, promising you that should something happen, they'll compensate you or reimburse you for a certain specified amount. All right, there are various measures you can put in place depending on the type of property or whatever the subject matter of insurance, what you are insuring. So for example, if it's a warehouse with a lot of goods in it, some of the things you can put in place to reduce your risk, maybe smoke detectors, fire extinguishers, the fact that the housekeeping is good, the goods are packed on pallets, it's not on the floor, so that in case some water comes into the warehouse, it doesn't damage the goods straight away unless there's a lot of water, it's a lot of flooding. Then, okay, so those are measures normally we would even advise. And we do those risk assessments for free. When you are insuring a certain type of property, we come there, look at it, and then advise you, put that in place to limit the occurrence of the risk.
We are still talking insurance with my guest, Michael Larbi. He is from Enterprise Insurance, and today we are giving you all the fundamentals on insurance as part of our week of laying the right financial foundations. Now, I know the financial topic is very important, but I left it for the last because you need to remember some of the things being said. We are in very difficult financial times as a country, globally, actually. So now, what should I keep in mind when I want to buy an insurance policy?
When you want to buy an insurance policy, you should be clear what solution you need, what your need is. What do I need? What am I seeking to protect? There should be no ambiguity about it, so that you don't take a policy and then something happens and then you tell us, oh, I thought the policy was meant to do it. So ask questions. Tell them what you need. Tell them your problem. Then a solution will be preferred for you. If you have questions, ask and know everything about it, so you are sure what you are buying. I mean, it's often said, buyer beware. Be sure of what you are buying. You need to disclose every material information to the insurance company, so they know everything about the subject matter before they take it on board to say we are charging you X amount or Y amount. It is important to also insure for value, insure at the right value. Avoid underinsurance. Underinsurance is where you know the market price of the item is, let's say, 50,000. But because you want to reduce the premium you are going to pay, you say it's 20,000. So let me give you a typical example. So let's say we are friends. You have an old car, you tell me you are selling it. We are party, so I talk, I beg, then you have mercy on me and say, oh, this car, instead of I'm told it's going for 40,000 on the market, but because we are parties, you give me 30. When I'm going to insure the car, I need to insure it at the 40.
Not the 30, I got it.
Because
nobody will give it to me at 30.
Yes, if we give you 30, if something happens and the whole car is gone and we give you 30,000, you can't get the car because the price on the market is actually 40,000. All right. So generally for insurance, if you underinsure and we get to know, we tell you that you are your own insurer for the uninsured portion. All right.
You're on your own.
You're on your own. For that part, you're on your own. We will just deal with the part that you give us. And normally it will go against you.
So honesty is actually a better policy.
Yes. So this full disclosure, tell them everything about the property or whatever it is you're insuring. Explain your needs very clearly to them to have a full understanding of what you need so that the good...
but I'm sure as an industry, you have benchmark values for certain things. So if I bring a Toyota Corolla and I say it's 5 years old, I imported it from some place. If I said I bought it for 8,000 USD, I'm sure you are able to tell that based on the market value, this is the real value.
So most often will prompt you to say, because even for some professionals, you're able to bring in cars, I don't know whether it's still happening, without paying duty.
Yes.
But when they are insuring,
they have
to add the duty because assuming you wanted to buy one on the market again, without the duty, you may not be able to get a similar car. So it's always important to ensure the right value, full disclosure of every information about what you want to insure. Don't say the car is a 2017 model when it is actually 1997. All right. Some of those things can even make the contract void ab initio. So full disclosure of know what you are buying, understand fully your obligations under the policy, get to understand it so that something doesn't happen, because for every policy there are exclusions. Get to know some of them so that you don't get yourself in trouble and then the insurance company will say we will not pay because this is a clear exclusion under the policy.
How different is insurance from investment? All
right, so for insurance, it is a promise to pay or to reimburse you or to compensate you should an unfortunate event occur. And those unfortunate events, we list them. So we specify the risk, give you a general idea. Right. So if that unfortunate event does not happen, there will be no obligation on the insurer to compensate you. Right. For investment, typically, you are promised a certain interest depending on the investment vehicle you are using, you are buying, instrument you are buying. So if it's a treasury bill or shares or whatever, there's a certain return you expect. Okay, some can be specified, some depends on the volatility of the market, particularly when it comes to shares. It's not a done deal, it's not a straight jacket that you get X amount, no. For these days, for even insurance policies, because we are being innovative all the time, we have components of the insurance policy that comes with some savings or if you like some investment component where you can even do a cash withdrawal after a certain number of years if you don't make a claim, or even for life policies, after a certain number of years you can say there's a benefit that accrues to you which you can cash out from the policy that you have taken.
So to end, what will you tell our viewers, final points about insurance that we should not forget? 2 quick points.
Important to protect yourself. Don't leave yourself exposed to nature, to chance and events. Insure yourself. Take an insurance policy. If you don't know what insurance policy to take, you can talk to an insurance broker. You can talk to the insurance company. We have also agents. You can talk to any of these people. They will be able to advise you on what, based on your needs, on what insurance policy will suit your need. See insurance as very, very necessary. Very, very necessary for your daily living, so that in case something should happen.
As I say, in case of incasity.
Yes, you will not be crying plenty, because Bernard, I tell you, sometimes the reason why people cry so much when they lose their parents, that kind of thing, is because sometimes the person is the breadwinner, all right? And apart from the fact that you are losing having somebody around you, you're also losing somebody who is financially helping you. It may be your fees, it may be somebody you run to when you're hard up and all of that. Okay, so it is important to secure yourself by buying an insurance policy. Always, and make sure you pay your premium, renew your policy when they expire. Don't leave it, don't forget about the renewal date and say you've chopped all your money. No, make budget and plan. I know my policy expires in January every year.
Okay.
So when I get my December salary, I know 1,000 cedis or 500 or two cedis is going for insurance. Put it down and renew your policy. Don't let it lapse. Protect yourself.
Thank you, Michael.
Thank you very much.
Larbi. Michael is the senior manager for broker-led corporate distribution enterprise insurance, and has been giving us the ABCs of insurance. Very insightful, very educative. Thank you, Michael. That's all we have time for today's edition of the Effective Living series. We'll be with you next time. Bye-bye.